This house in Seattle, Washington is listed at $749,900, and we're going to walk through a real mortgage quote to talk about how much this house would really cost in terms of monthly payment, as well as the cash up front if you were the one buying it. Because I know that when you're early in the mortgage process and you're looking around at online mortgage calculators, you don't know how much faith to put in the numbers that they give you, or if those numbers are even relevant to you. So hopefully looking at a real mortgage quote will just give you more confidence early in the process. My name is Landon. I work with Cleveland Street Mortgage based in Bothell, Washington. We're a mortgage broker, and this is a real quote we're pulling on this house, so hopefully it will be some reliable numbers. Of course, it's not going to be the exact numbers you end up with, but hopefully just a little bit more confidence going on early in the process before you get really deep, so you know what to expect. So let's go ahead and get into it. All right, so I've created two different scenarios here, one a 20% down scenario and one a 50% down scenario. And in the 20% down scenario, I'm assuming you're a first-time home buyer. And over here, you are not a first-time home buyer. And that is the reason I specify that specifically is because it's going to influence your pricing. It's going to influence what your interest rate is and just different factors of your pricing. I'm also assuming a credit score of 740, just so you know some of the assumptions I'm having. There are other things that are going to have an impact on your pricing, but those are some of the main things to be aware of. So let's walk through the 20% down first and come back and see how the numbers change with the 50% down. With the 20% down, your monthly payment is going to be $4,725, and there are three different components here. We don't have mortgage insurance because you hit 20% down, but we do have homeowners insurance. I'm estimating $125 per month, and that is an estimate, but it's a pretty common number that we see for this price point. That'll vary depending on who your insurance provider is and how much coverage you're getting, so that can vary, but that should be a pretty reliable estimate. Taxes of $558 per month, and that is the actual number drawn from the county website for this property in 2024. So that is an actual number that you can expect. Sometimes Zillow gets those right, sometimes they have them wrong. It's good just to check the county website to make sure you know what to expect on taxes. And then principal and interest of $4,042. That is based on a loan amount of $599,920. and an interest rate of 7.125%. Again, this is a real quote I pulled from live pricing today from one of our lenders, that is kind of a good reflection of where interest rates are at. But again, it's not a guarantee of that rate. It's not an advertisement for that rate. It's going to vary depending on several factors. So don't assume you're necessarily going to get that rate, but hopefully that's a good picture of where we're at right now as far as rates. In terms of cash that you're going to have to bring, you need to bring other closing costs besides your down payment, and those are things to cover. There's two main buckets of other closing costs, basically just paying costs involved in getting the loan, people and services involved in helping you get the loan and get the house. And then the other main component that's included in closing costs is prepaids. So you can look up what's included in prepaids in another video. So what we're showing here for this situation as far as closing costs is $9,326, and that will vary depending on several factors. It'll vary depending on your loan amount and your purchase price for sure, and several different factors. Here we have a credit of $1,246 offsetting some of this closing costs. I'm not going to get into exactly why that credit is there, what the credit is, but basically credit is when the lender will give you some cash up front in order to take an interest rate that's above their par rate, which would be 0 points or zero credit, and typically you just don't see interest rates, at least as far as quotes. You won't see them priced at exactly 0 points. You might be able to get that. You can with this particular lender, but that's a conversation for another time. So we're showing $1,246 in credit, and that's offsetting some of these closing costs. Otherwise, those might be a little bit higher. And then estimated cash to close is your down payment of 20% plus your closing costs of $9,326. Means you're going to have to bring $160,501 in order to close this deal. All right, so how do the numbers change with the 50% down scenario? Now your monthly payment drops significantly to $3,209, which shouldn't be a surprise. It's a 30% jump in down payment on a $749,000 house. So that's going to have a pretty pretty significant impact. We've dropped about $1,500 on our monthly payment to $3,209. That's mainly just principal, because you can see the interest rate is still the same. We'll get there in a second. So homeowners insurance, again, still the same, $125. Taxes still the same, because those are dependent on the house, not the loan structure. Those aren't going to change. Principal and interest of $2,526. And that's based on a loan amount of $374,950 and an interest rate of 7.125%. That is taking this time a credit of $591. So the interest rate in this case was the same. It's important to know that this interest rate, I priced this out with assuming that you were a first-time home buyer. Or the 20% down. In this case, I priced it out assuming that you were not a first-time home buyer, so that would have been more apples to apples there, 20% versus 50%. And this interest rate was significantly higher, but then once I showed that you were a first-time home buyer in this 20% down scenario, which the thinking there is just that, first-time home buyer, you typically have a lower down payment. So in this lower down payment scenario, you're probably more likely to be a first-time home buyer. And so once we made you a first-time home buyer, we were able to lower the interest rate there, because there are incentives for first-time home buyers that improve their pricing basically. But if we hadn't made you a first-time home buyer, like over here, you're not a first-time buyer, then these interest rates would have been more different. This one would have been higher. So pop down, closing costs are now $9,937, a little bit higher because the credit is a little bit smaller, and then estimated cash to close of $386,082. That's your 50% down payment plus your closing cost of $9,937. You'd have to bring a little under $400,000 to close the deal in this scenario. I hope that's helpful. If you want to get a quote on a house that you're looking at, or just get a look at your income to see how much house you could qualify for, how much of a loan you could qualify for, please do reach out. Again, we are based in Bothell, Washington. We do loans in Washington and Idaho, and all of our contact information is in the description below. If you want to get a sense of what it's like to work with our team as well to get a loan, what our process is like, we have information on that linked down below as well. You can check that out, so please do reach out.